Right, welcome to the fourth lecture of my series of Learn How to Invest lectures. I would like to sort of review our progress so far and then work on how much we have progressed. Okay, first we saw how to open a platform, an account on a platform. Second lecture went through how to fund the platform. The third lecture showed you where to navigate yourself on the various platforms to the location where you can find information about um, various products. But I directed your attention to mainly exchange traded funds. Okay, so I don't want to go into the details about why I prefer exchange traded funds over all the other products. I will do that in another lecture. It's a bit tedious and long-winded, so I might have to sort of split it up various small bits. But let's first skip all that. Assume that I know what I'm talking about, and then just stick with me, guys, and let's go and find out what this product called exchange traded fund is, and then make a decision as to how best to sort of narrow down our products. Okay, so for the purpose of this lecture, I'm going to stick to AJ Bell platform. Okay, so going back to that platform, and I'll see you there. Okay, so I think you have your AJ Bell exchange traded platform ready. Okay, so now we can find out what these products are. There are millions and millions of products, guys. There's 20 pages. So first thing that you want to do is, this is the bit that is important, but first I don't want you to do that. I think the best thing to do would be, it could be either quick rank or screener. But first, I think I would go to the screener platform, screener screen. And here, it's loading the total number of funds available. It'll take some time to sort of load there. Okay, so the first thing that you need to do is go down to the bottom of the screen, I think. It's still loading. Okay, so what we'll do is, we'll do the various things. Okay, so first, so these are the criteria on which you try and find what you want. So, fund universe, we call it a universe. So it's so vast. So ETF can be traded in the London Stock Exchange and can be traded in all other stock exchanges. So you could want to sort of do all or London Stock Exchange, it doesn't matter. I'll just leave it like that. Now, companies, there are so many companies that sell ETFs. So if you are knowledgeable enough, then you can sort of say, yeah, I want just these asset managers. BlackRock in Germany, BlackRock in Ireland, all kinds of. But what if you do any of these things? That restricts the number of results you will get. So I don't want you to do that either. So leave that alone. The other thing is, this is fired up by a company called Morningstar. They are an independent information only providers for investors, and they rank the funds depending on No, they categorize the funds depending on which sector. So this is something that you may want to select. Okay, so you've got Africa, currencies, and if you depending on all the Asia, bonds, Asia, Japan, Asia, every conceivable categories are listed here. You can want to sort of invest in China, Canada, just commodities, energy, all kinds of things. This, as I said, you might sort of spend in this world, you could spend so much time. So I don't want you to do any of these things, you can do it in your own time. But for the purpose of this lecture, I just want you to sort of go to global, global equity, global equity, global large cap. So you've got global large cap, growth, equity fund, growth, value, small cap. Okay, so these are the four things that you need to sort of figure out which one is. So let's stick to global equity fund. Large cap, blend. So that's the category that I have started with. Okay, so global large cap. Okay, so global large cap, and then it's all currencies, or you can choose if you want just GB pounds, you want to sort of invest in euros, US dollars, Japanese yen, Swiss franc, any of these things. You can restrict whichever currency that you just say all currencies. Leave it like that. And then you go down to, I don't want to invest in one-star funds. They are not very well performing. There's something wrong with them. Their infrastructures may not be right. They haven't got many people to sort of look after the funds. So I just want, just like hotel accommodations, I go for 5-star. Okay, 5-star. There we are. So 5-star funds belonging to global blend. I don't want. These are all technical. Let's assume that we don't know any of these things. Okay, and I have some clue, but I don't want to sort of use. I'm just assuming that anybody who watches this is sort of fairly new to this concept. I don't want to sort of worry you with all those details. I'm going to go all the way down. Okay, so this is where the magic lies. Okay, so look at that. That's a total expense ratio, which means how much of your money the fund managers will reduce before they invest into whatever you want. Or every year they take some money out of your portfolio. How much of that? So say you have just say you have £1,000,000 in your portfolio. According to this, it says it will take away 3%. So there are funds which will take away 3%. So just for information's sake, I'm going to say, do that. Maybe not. Okay, I don't want to sort of complicate things. I want a fund which charges me 0.5%. So that's why I moved the slider down. Did you see that? Did you see me moving the slider down? This is 2%. This is more than 2%. It could be anything like 2, 4, 10, 10%. I don't want any of that. I want to screen it away. I want to sort of keep going down, 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 down. It's 0.5%, 0.5%. Between 0, charge me anything at all, and 0.5%. I'm willing to give that much amount of money to the fund. Okay, so that's one thing. The other thing is, I don't want to have funds which are tiny funds, like 10,000 pounds in it, 100,000 pounds in it, 1 million pounds in it. Total amount of investment is only 5 million pounds in it. You may think 5 million is big, but trust me, they are tiny. So see the scale there. So it's 0, 250 million, 500 million, 1 billion, 3 billion, and more. So I want to move the slide all the way up to 3 billion or more, which means that these funds are huge, humongous. The advantage is, if they are big, you don't have to be 3 billion. You can even have a fund which is 1 billion and more. But for our purposes, I'm going to sort of try and restrict myself to the best of the best funds. So I'm going to sort of move to 3 billion or more. If they are 3 billion more, there are two advantages. One, they're huge. They've got lots of money coming in as management fee. They have huge number of people looking after it. So that's a safety factor. The other factor is 3 billion means there will be lots of people buying these shares, lots of people selling these shares. Now, what's that for me? What does that matter for me? Yes. So tomorrow, if you want to sell these shares, you will find a buyer for these shares very easily. So that contributes to your liquidity, which means that anytime you want to buy these shares, you can get access to the money. So that's a big criteria as far as I'm concerned. So that's the reason why I sort of choose big funds, 5-star funds, okay, 5-star funds, and they're restricted to global large cap blend equities, okay? So then I go down to the bottom of the screen. Total results are still loading. Okay, so I'm going to sort of search for these. Under these criteria, what are the number of shares that are available under these search? So let's see what comes up. So it will take a little bit of time, I think. Yeah. Fantastic. Fantastic. Very, very strict criteria. All criteria are fantastically strict. All these shares have 5-star, okay, all of them. There are a total of 6 shares that will satisfy our criteria. Okay, so these are the 6 shares that suits us. Now, if you look at it, you can see the expense ratio is 0.2%, 0.2%, 0.3%, 0.3%, 0.3%. Okay, so this is invested in US dollars, this is invested in GB pound, US dollars, GB pound, US dollars. So that's how you reduce the number of shares. And then what you can do is you need to go and find out what these shares are. What are these products? Why should I sort of invest in them? So you need to know this is a snapshot of these. You can go into cost and charges. Let's see what comes up with it. Cost and charges. Very slow. Yeah. Cost and charges. So yeah, that gives you the same thing. Yeah, cost and charges. Performance, short-term, portfolio, target market. Okay, so You can go into each of these things and see what happens. I've never been in any of these places, so I don't know what each of these screens are going to bring up. So it says equity style, bond style, average market capitalization, total assets is like 18 to 19 billion, 3 billion, 3 billion. So by far, this is the biggest fund here. So this has got 18 billion, 6 times as big as this. Okay. So now what you do is you remember this is US dollars. So if you invest in this share, your money is in pounds. It will be converted to US dollars, and then they will invest in it. So if you don't want this conversion, Malaki, so you can invest in GB pounds. It says GB pounds here. Although the fund is initially the core currency is US dollars, it will just keep your money in GB pounds. So let's click on that for UK investors. And you're going to sort of come up with another screen. There we are. So this is a screen which comes up when you click on that. So you need to, it's pretty busy here. So you need to know how to navigate the screen. So the share, the product, the name of the product is iShares Core MSCI World UCITS ETF. Okay, so that's the name. This is the symbol for it. So whenever you say you want to invest in ETF, and you'll say, what is the name of your share? This is big, huge, big thing. You may not get it right every time. So the best thing is to sort of memorize this is a symbol. Everybody knows what that is. So you type that in, it will come up. You say, this is the one. So SWDA, that's the symbol. Okay. Now, if you go down this chart, you get what happens to 10,000 pounds invested so many years ago. It's become something like 16,000 pounds today. So it's 2015 it was started. It's got all this information if you want to sort of interested in it, go and find out. So you've got a net assets, so many US dollars, expense ratio 0.2, portfolio. So you will see that its equity style is large. So invested in only large size all over the globe, all the big companies of the world. And if you want to see the top few investments, so 3% of its money is invested in Apple. Again, 2.8% in Microsoft, Amazon, Facebook, Alphabet, all US companies. Now you might think, oh, it's only US companies. Just go down and you'll see top stock region. United States, 65%, Eurozone, 10%, Japan, 7%, UK, 5%, Europe, 5%. This is how it's distributed, the amount of money. Okay? So your money is distributed exactly like that. So 100 pounds if you invest, 64 pounds will be invested in the United States, 10% will be invested in Europe, 7% in Japan, 5% in UK, and other regions, 5%. Okay, so if you want to sort of see the top sectors, it's invested in the financial sector, technology sector, healthcare system, sectors, industrial, consumer sectors. So this is how it is invested. Now, this achieves for you two very important factors. Why do you want to sort of do that? Okay, this is different from buying a share. I'll tell you why in the next lecture. Let me finish this lecture by saying where you can get all the information. You can go into any of these. So how did it perform chart-wise, various research things, performance, risks and rating, portfolio, management, costs and charges, filings, details, target market. But if you go to this PDF, I'm going to sort of open this up. And hopefully it will open up in another screen. So I'm still here, still on the same screen. And if you go to this screen, you will get the company-based information. Information now available by the company. So you can go into details about what this company is all about, what its principles are, where it wants to invest, how it has performed over the many years. When did it start investing? 2015. It's 2019 now. It's almost 2020 now. What are its various returns, quarterly returns, risk profile, all kinds of things. If you go into all these details, I don't want to sort of do this. This is a basic investment video. I don't want to go into all that, but you can. That's where it's available. So you got all these things, how much of these are invested, JP Morgan, Johnson & Johnson, Visa, Nestle, all kinds of places. So it's, now, where does it find all these information? How does it know where to invest? If you go into greater detail, you say the fund benchmark, and this is the index it tracks. So if you sort of type this into Google, it will tell you what this index is and what are the companies involved in this index. The investment objective of the fund is to provide investors with a total return, taking into account both capital and income, which reflects the MSCI World Index. So MSCI World Index, this is what you need to sort of put into Google. You will get all the information that you need as to how much, what are the companies in the index, and what percentage the index tracks. So the index gives you an indication as to what percentage of your money you should put. Now, you might say, and well, why do I want to sort of give it to these guys? I can sort of do it myself. Yes, you're right. You can do it yourself. But just imagine the cost. You've got to go to buy Apple, you've got to stock those shares, you've got to have a certificate which will be issued in your name. Every quarter, Apple will start writing to you about this and that and details and dividends, and send you checks for the dividends. The amount of money and time you have to spend in cashing this thing and organizing this. And if you go into there, total stock holding, it's got 1,637 stocks. Okay? You will get letters from 1,637 companies. It's humanly impossible for you, a small shareholder with 10,000 pounds, to split it up into so many different things. That's the advantage of investing in this share. All you have to do is just buy this share, and it will diversify your investment into so many small percentages at no extra cost. What are you spending? You're paying only 0.2%. It's a very small amount, in my opinion. So that's the advantage. So this is how you sort of and get to this. Then you can sort of go into let's go to the next check. You can click on that. You will get information about Lexor. That's also a hugely reputable company. It's a French company, so it's also done almost the same thing. It's basically it's doing the same thing. Okay, so you can go with one or the other. I don't have a problem. So the symbol is WLDL. You can buy that, WLDL, SWTA, both are the same. It's your choice. So this is what I would, one of these companies. You choose whichever you want. I won't say which one, so you can carry on and do whichever. So that's how you do your research. Hope that is clarified many things for you guys, and I'll tell you more in the next lecture. So I'm going to stop this recording for the moment, and I'll see you in the next.